Welcome back to Real Estate Today. I'm Elliot Koolik, and we're back with Lisa Pasillo of All Risk Insurance. She's the president. And in the first segment, she was really giving us some great insight into how you break down the policy, you know, the different types of coverage A, coverage B, C, and D. And in fact, she even explained that flood insurance really is an additional policy. What I want to talk about now is how do you choose, or Lisa, how do you help someone at home choose the right policy? Should they go to Citizens? I mean, everyone's under the impression that it's very hard to get insurance, or homeowners insurance. So can you speak to that?
Well, here's the thing. Every insurance company, whether it be Citizens, whether it be a privately held company, they're all based on underwriting guidelines. Every company has a different underwriting guideline. Some companies will only write homes 1995 and newer. Some will write homes up to 50 years old. Some will not write with wind. Citizens has to take anybody. They cannot deny anyone. They're the insurer of last resort. We're only supposed to, as an agent, put them there if there's nowhere else for them to go.
So would you say the people that are with Citizens have the hardest type of houses to insure?
No, a lot of people that are with Citizens just don't know any better. Because a lot of people that were with the companies that recently, I mean, 2 more companies just went out of business. So they went into receivership with the state. And all the people that were with the companies a couple of years ago that went out of business, a lot of people just don't know any better. And quite honestly, they call agents, or they might call their people, and they'll say, well, we can only put you with Citizens. And they don't really research it. Now, me and a lot of other independent agents like myself, because we're an independent agent and a broker, we can represent more than one company. Whereas if you have an agent like a agency that would sell just to Citizens or just their own brand, they don't have that option.
Well, how many choices do they realize? Someone at home, they purchase a home, or they realize that they want to change their insurance, you know, from their existing company, or they dropped, which has been happening a lot, or their rates went up significantly. Right. So there's an event that's happening that's causing them to reevaluate, you know, their insurance. How many choices do they really have outside of maybe considering, you know, Citizens?
Well, I mean, just my company alone, my agency alone, I mean, we have about 5 or 6 different homeowner carriers by itself, right, each varying on the underwriting restrictions of where they're located, what county. I mean, we've saved people. I have one carrier that we deal with where I've saved people that were given quotes of $10,000, $11,000, $12,000. I've gotten them quotes for $6,000 for the same coverage.
But I think once you speak to someone and you listen to the facts that are specific to their, you know, particular home, probably within a few seconds, you kind of know which direction they're going to go.
Exactly. And not only that, a lot of people are very overinsured. Right. I mean, I've had situations where I've spoken to people that are insured for way more than they need to be.
Well, is it the insurance broker not doing the right thing? Is it they're just being negligent and they're just not doing their homework? Or is it more the customer wanting more insurance just because they want
I think it's just it's a combination of a lot of things. I don't think that anybody's negligent. I think it's more so that, you know, people just think that what they have happens to be worth a lot of money.
Well, that's everything, right?
Not to say that it's not that valuable, but if you have, for example, a 3,000 square foot home, it's not going to cost you $1.2 million to replace it.
Right.
You know, so people, you know, they ask a lot of people that are agents that maybe, you know, are maybe just starting out, may not have the experience, maybe they, you know, just don't know any better. They say, okay, well, that's fine.
So when you're talking about that, and we talked about this earlier, you don't have to insure for the land, for sure.
Absolutely not. The land is going nowhere.
And that's a pretty easy thing to figure out, you know. I mean, clearly rebuilding a home, depending on the level, you know, a 3,000 square foot house could be rebuilt for $100 a square foot. It could be rebuilt for $400 a square foot, depending on where it is and what's the level of finish.
Exactly.
You know, the block is the block. The roof tiles, to a certain extent, are the same. The trusses are the same, but the finish is really where, you know, the money is.
So that's exactly my point. People need to realize that they don't have to overinsure what they have. They just need to insure for what it would cost to replace it.
Well, what would cause something to be overinsured then? I mean, if you're telling me that you fill out your whole estimator online, and then the insurance company comes back and says, okay, well, this is what we think the replacement costs, wouldn't they cause it to be overinsured?
No, because actually what happens is a lot of times people don't realize what their square footage is. So for example, they'll say to me their house is 3,000 square feet. Well, the estimator is based on that 3,000 square feet.
Right, but don't you need to make sure you put in there that it's a certain type of flooring?
Of course.
Wall treatments, those kind of things to make sure.
A lot of people seem to think what they have perhaps might be a little bit more expensive than what it really is.
Right.
You know, when I ask somebody if they have a builder's grade kitchen, do they have a builder's grade bathroom, or is it custom? To them, it might be custom, but it might have been built in 1974 and been a Formica countertop with particle board doors.
Well, I think that I think the answer is it would be incumbent upon the insurance broker to make sure they're extremely detailed, to make sure, I mean, look, there's a difference between a Franke sink, which is a very expensive undermount sink, and the difference between just a regular, you know, kitchen sink. So, you know, those are things that I would think that you probably make sure you know to make sure it's insured properly.
That's why we're trying to save them money, not just to get the insurance policy, but we want to be able to build a whole rapport with them and be able to assist them in what they're doing is correct.
Well, let's, you know, it's a great point you're bringing up. So let's talk about this. I mean, saving money is important to a point. I mean, clearly you don't want to be the least expensive, you don't want to be the most expensive. Typically, you know, and this is not just with insurance, but with anything. You kind of want to be somewhere in the middle is usually the right place. So let's talk about how you are able, once you have an idea what the replacement cost is, and the insurance company is saying, well, the premium is going to be $5,000. Tell me what you and your company and other companies like, you know, All Risk Insurance does to kind of massage the numbers a little bit.
Okay, well, what we do is we ask the customer a lot of questions. Number one giant way of saving is your deductibles. You have two different deductibles on your policy. One is all other peril deductible, which gives you a choice of $500, $1,000, or $2,500. Okay. All other peril meaning anything other than a hurricane. So that means if you have a pipe break in your wall, if you have your roof fall in, if you have
mold,
you have a standard $10,000 coverage. That's part of the policy.
You know, sometimes you have water leaking into the wall. People don't know about it.
Exactly.
Before a pipe, sometimes.
Pipe breaks up in the wall.
Or it just breaks a little, you know, and then it's leaking slowly. I've had that on occasion.
Exactly. So that's why you have a deductible for that. Now, obviously, the higher the deductible you have, the lower your premium. So it's kind of a catch-22. You either pay for it each month now for something that may or may not ever happen, or you just take the higher deductible and take your chances, which 99% of the people are doing. You know, then you have your hurricane deductible. You have a choice of 2%, 5%, and 10%. That's the percentage of your dwelling amount.
Okay.
Again, it's a choice. The higher the deductible, the lower your premium.
I would imagine as a professional, you look at their situation and you ask them certain questions and you give, you know, you really spell it out for them, and then, you know, you can, as a team, you can make, you know, an educated decision.
Exactly. And in addition to that, there's certain things that they can have on the house that also gives them huge reductions. Now, storm shutters, roof mitigation certificates, these are things that people have where they have somebody come out to their home and they inspect their roof trusses and they do everything as far as checking out to make sure the wind speed and everything like that is up to code. Okay. They get a discount for that. They also get a discount for having an alarm system. They get a discount for living in a gated community.
Oh, these are good things to know.
You know, people that live in condos get a discount for having a central sprinkler system in the buildings. So there's a lot of discounts that either people just are not aware of, and they just don't know, so why not pass it down to them?
Well, having a person like you to spell it out for them is probably a great thing.
Well, it's good to be me.
All right, well, you know, I want to wrap up this segment, so, and then I want to talk about some, you know, actual real-life situations that you've experienced. You know, I'm sure a lot of people at home have experienced the same thing, so we'll be right back with Real Estate Today.